How are we all doing? Happy Monday. It's the end of the week. Well, it's last week, the month, basically. So, end of the week, end of the month, I mean. How are we doing? Morning, EA. Morning, Kennelly. Morning, Ismet, Jerry, Daniel, Andres, Amy, Virginia, Baggy. How are we doing? Hope you all had good weekends. Not a lot happened over the weekend news-wise. Kick off with the news. Very boring. Literally nothing happened over the weekend with the news, so there's nothing to report. Israel increased attacks on Gaza. That was it, pretty much. So nothing exciting to report on the news over the weekend. This week, today, there's no news at all. Really quiet today. So we'll see what happens to the markets today, but there's no catalysts to move us in any direction today. It's all very, very boring. Tomorrow, we kick off with the claimant counts for the pound. Then it's PMI week this week. So it's PMIs all week, which is good. Lots of volatility potentially off of these. So we kick off tomorrow with the Euro PMIs, French and German, basically, which makes up the majority of the Eurozone, which is why we don't really worry about the Eurozone one. We've got Bullock speaking for RBA. We've got the PMIs then at 9:30 after the market open for the pound. Lagarde is speaking later on in the day, and then we've got the US PMIs. Aussie, this is the big one of the week. The CPI for the Australian dollar. So this is the inflation figure for the Aussie. That's going to be quite a big mover. It's forecast to be positive, which will be positive Aussie and positive New Zealand. It needs it as well. We've had some big drops on those. So hopefully we get some decent move off of that. Canadian monetary rate, we've got 5. I don't think this is going to do much because I don't think they're going to deviate. So we're expecting a 5%. We'll probably get a 5%. We will get a whipsaw off of it. We'll get some kind of movement, but I don't think the market's going to particularly pay a lot of attention to it because it's just an as expected forecast. We have got the press conference though an hour later, which is where they will lay out their forward guidance. So we might get some movement off the press conference. Basically all the rates pretty much are now frozen. The euro is the only one that did an increase last month. Everybody else is not increasing interest rates anymore. So this 5 is not going to be a surprise. It's only a surprise if they don't do as they say they're going to do, which obviously is always on the cards. But we're expecting now all countries basically to keep inflation where it is, see what impact that's having on CPI, and then they can tweak it up and down if they need to. But ideally, we're looking now for drops on inflation moving forward. So I wouldn't expect anything more than that, basically, for the next sort of 6 months, really. We'll see what happens. Press conference, we've got Lagarde speaking again. We've got Powell then speaking on Wednesday evening. We've then got the euro rate again, forecast 4.5. We're expecting a 4.5. Shouldn't really get anything different. So although there's, interest rates are massively, massively important, the main market mover at the moment, we're not expecting anything to actually be different or change. So that's coming up on Thursday afternoon. Sorry, we got the GDP for the US and unemployment, and then we've got the ECB press conference after the rate. And then Friday, we've got PCE. So a lot of news all week. Today is dead. Nothing today at all. But starting tomorrow morning at 7 o'clock, it's basically every day. Huge, huge, huge news events. But they're only going to be very big if we get an unexpected result. So we'll see. Quickly looking at the DAX before the market opens. So DAX, we've got a gap up situation this morning. Morning, everybody else. I haven't said a hello to. So yeah, gap up situation this morning. So potentially we may get a rally down to try and get that gap filled to start the morning off. We've got a little gap fill upside as well on the DAX from Thursday, Friday. So upside potential, basically, I'll be watching the gap fill to the upside. And then obviously to the downside, we're watching the gap fill there. But as you can see, Indices not happy at the minute. There's not really any downside if you look on the DAX. You've got to go out to the 4-hour chart to find support now. which is all the way kind of down at ADR today. Basically, there is a support area. Look, so that's previous resistance turns support. So we can retest that area there. Yeah, downside ADR. So if we do go through the gap fill to the downside today, and we break out of Friday's low, we'll be looking for an ADR hit, basically, which will be that support level, which is somewhere around here. And upside, obviously, gap fill to the upside. So there's plenty of room for an opening range break. If it's going to go today, we will see. We've got 1.5 minutes on that. US indices, not a lot of movement overnight on the US indices. They're all pretty stable. Absolutely no movement at all on the NASDAQ, the Dow, or the S&P. All very, very bog standard. Earnings fortnight really kicks off today. So we'll look at this more this afternoon. It's not really relevant to this morning as much because we haven't got anything today. So today's clear. But tomorrow it all kicks off. We've got Coca-Cola, General Electric, General Motors, Spotify, Google, Microsoft. You know, tomorrow earnings fortnight properly kicks off. So this week is the big week. So we should see a lot of volatility coming in this week at some point. Right. So wait for the DAX. So there's your upfill target. Is yesterday's high pretty much, which is the gap fill. And then downside just down to there. Pretty tight range at pre-market. I don't think I'm going to take the pre-market today. It's basically that candle. Pretty much. Might be. 203 is 10% of ADR. Oh, there we go. Now we've got some range. Not quite enough, though. Oh, there we go. Blimey. Okay, not going to get on that. Won't get that on. It's too quick. Too much volume. Oh, hello. There we go. Yep, no, we did manage to get it on. So short. Just about short. God, that took a while to execute, didn't it, this morning? Too much volatility came in there at the open. Okay. So short on the DAX. That's awkward. Gap fill, basically. Going to need to break out the lows to get 2R on this. A lot of sellers came in at the open there, though. Blimey, US indices selling off really hard. Big orders just coming on the Dow. So here we go. Morning, Dion. Morning, Outro. Morning, James. Hood, JC, Gregors, George. Morning, Baggy. Watched a terrible film last night on Netflix. New film on Netflix. I think it was Swedish or Finnish. It's called The Conference. Awful. It's meant to be a horror film, but it's dubbed. And it's just terrible. It's actually quite funny, but terrible funny. Morning, Harold. So just want to be aware of bounce down here. Always a bit tricky when your target is outside of potential limit order range. So there'll be orders sitting at the low from Friday because it's yesterday's low and it's also last week's low. So they will be buying that level up. So when we hit that level, we're going to find some potential support there. Whether it bounces or not, we will see. Got to get there first. Dow Jones is really selling off this morning. Not quite sure why. We haven't had any earnings. They're all pre-market on Friday as well, so not basically a sell-off. US dollar's coming down quite hard. Or is that Swiss franc strength? Let's have a look. Oh my God, more Swiss franc strength. Look at this. Swiss franc will not give up, the Swissy. Pound pushing up against the US, and so is the euro. So US is weak. Morning. Nextly, can you explain magic numbers? Yeah, they just got to be unique on every chart you put an EA on, basically. Can they be anything? Yeah, any number you like. If they're the same on two charts, the EA will assume that it's to differentiate orders, basically. So if that's magic number 1, 2, 3, and 4, if there's an order taken there, it has to know which orders to manage, because you could have different trailing stop settings on that one and that one. So it needs to be able to identify which orders it's placed. That's basically what magic numbers are for. So anything taken with magic order number 1 will be managed by the EA that took it. So just got to be unique. Very, very simple. Just make them unique. It says in the inputs, unique on every instrument. Just make it unique. You won't have a problem. Not got a lot of volume today, have we? Not surprised, seeing as there's no news and there's no stock earnings today, but see where we go. Okay, we'll come back to that in a minute because it's not going anywhere. Right. So ADRs, basically there aren't any today. We haven't had enough movement in Asia. So all Asia's done is kept within the range for most of the pairs from Friday. So we haven't gone anywhere at all today, as you can see. Market's starting to wake up a little bit. So there's no yen movement, no Aussie movement, no New Zealand movement. It's just dead this morning so far. So nothing to report on ADRs. Weekly ranges, obviously, there's going to be nothing lit up there because it's first day of the week. Monthlies, we've got a few. We went through these last week. The vast majority of these, as you can see, are Swiss franc based. So we've got the Aussie Swiss, we've got the CAD Swiss, the Swiss yen, the Euro Swiss, we've got the Euro New Zealand, the Pound Swiss, and the New Zealand Dollar Swiss. So the only thing that isn't extended because of the safe haven rally is the Euro New Zealand. So that's pretty much the only one that's worth looking at. Euro New Zealand, as you can see, we've had a huge rally. Weakness in that New Zealand dollar coming through massively over the last couple of weeks. So that is your monthly range done there. It's only done 100% of its monthly range, but even so, it's 100% of its monthly range. So very good opportunity for a pullback. We had 2 extensions on this one, on the hourly, and no profit take move whatsoever. So I'm expecting at least a 50% profit take move on that. And it is obviously in a downtrend. So it could well obviously just do an A-shaped recovery and go all the way down. So good looking short opportunity on that one. But other than that, everything else that is extended on the weekly is Swiss franc related. And obviously the Swiss franc is because of what's going on with the Middle East at the moment. So whether or not this is going to pull back is going to be dependent on what happens over there. This ground offensive still hasn't happened with Israel. So they keep saying we're going in, we're going in, we're going in. And all they seem to be doing is bombing the crap out of Gaza and doing nothing else. So at the moment, the markets are just in kind of fear mode and not sure where they want to go because they don't know what's going to kick off. So, you know, it's the same. Although the conflict is between Israel and Palestine, we've got Iraq, Iran, Lebanon, Jordan, Saudi Arabia, everybody else around that area. It's a massive flashpoint. So market's just sitting kind of in waiting mode at the moment to see what happens. So until that happens, the money will probably remain in that Swiss franc. It could obviously power up further as well. You always got the question, whenever we have a safe haven run, there's always the question of when does it end? if you're going to pull all your money out of stocks and out of other instruments and put them into something like the Swiss franc, there's only a finite amount that's going to happen. Yeah, so there's a finite amount of money that is going to be pulled out and put into those places. When does it finish? So what you tend to do when you get one of these safe haven runs where we've got uncertainty at the end of it is you just get a kind of sideways movement, because they can't put any more in because they've put it all in, but they don't want to pull it out because obviously that's put it in there because they want to keep it safe. So we'll probably see kind of a range start to form on these Swissies until we get news what's going on over there. So at the moment, kind of in a few Swissies which just in and can't do anything with at the moment. So we'll see what happens with those. So that's your ADRs, your weeklies and your monthlies. Everything Swiss franc related obviously is an opportunity for a move. Obviously there's a monthly move which will probably retrace. It will retrace at some point. But right now you can't tell when that's going to happen. So that's a fundamental. Just have to sit on it and wait. DAX is stuck at the minute. 5-minute opening range. If you've taken the 5-minute ORB on the DAX, it's basically a long at the moment. So not really going anywhere. Stuck. So yeah, so that's your ADRs. There's not many RSIs to look at either today. So hourlies we're completely flat on. So we'll look at the 4 hours, but there's nothing to look at on the hourlies either today. Bought the ORB EA last week, focus on getting that working. We just stick it on your chart. Nothing to do. Stick it on your chart, apply a set file or set it up, let it go. That isn't really going anywhere. No. Morning, Jan, even. Yeah, so yeah, DAX is just stuck today at the minute. Looks like it wants to go south. Everything looks like it wants to go south. All the indices, all the US indices, weak today as well this morning, but looks like it wants to sell off. There we go. Got a bit of a move starting now, potentially, but these markets at the moment, we are so rotational at the minute. You can see from what's been going on, it's bearish, but it's rotational as well. So you get an awful lot of these days where we're just sitting around, and then you get a big move, which is usually off of news. Then you sit around, and then you get a big move, and then you sit around. It's very jerky. All the price action is kind of scared into something, sit around, scared out of it, something. You know, it's just that's the way it's moving at the minute. Very difficult to trade, but definitely bearish. If we have a look at all the indices, you know, when I was talking about this on Friday about being in bull and bear markets and how the markets are manufactured to be bullish, because the whole purpose of the stock index is to monitor the top stocks. Top stocks are always going to perform because that's their job. As shareholders, you need your company that you've got shares in to perform. So if it doesn't perform, they replace the board or change something to make it perform. So all indices are manufactured to go up, and they will continue to go up. However, when you're in a market like this, well, we've just come out of the back of COVID. A lot of people saying, oh, we should be entering back into a bull market. When the interest rates start to come down, we'll start to go up on the stock market. And that is probably going to be true. But at the moment, the Fed's saying they're not going to reduce interest rates until the end of December. So next year, not this year, next year. So what we're going to do, sit here with a bear market for another year? We haven't had a bear market for this period of time ever. We've never had such a big bear market. You kind of got to go out to the daily to see it, but we've not sat in a market like this long. It's just odd, and they're sort of calling this the pullback rally, but to me, kind of looks like it just wants to peter out again at the moment. So very, very difficult. Just got to watch these lows and look for market structure, because at the moment the structure on the S&P is 100% bearish, isn't it? Yep. So I'm expecting a lower low. Where you stop, difficult. So this area here on the daily is ADR today. So this could be where we start to put in some kind of bullish price action, but probably just going to go into a range, aren't we? Nothing's bullish at the minute. All the indices the same. Can't get anywhere at the moment. But we will see. Right. So RSIs, the only RSIs we've got at the moment are Euro New Zealand on the 4 hour. So that's really extended to the upside. We've already looked at this one because it's a monthly extension as well. We haven't stopped, basically. This New Zealand dollar has just been absolutely crucified. Bit of strength just came into the market there. There seems to be lots of sell orders coming in over and over again, but not actually getting anywhere. So we're selling a load and then just petering out, selling a load and petering out. Does still look bearish, so I think we're going to break. And I think we're going to come and test the lows. Wrong chart. Put my target up a bit. Just going to bring TP1 within the range, just in case we don't get out the lows. So yeah, Euro New Zealand massive extended. We're extended and embedded on this one. So as you can see, we've got an extension above the 70 level. We came back up, tested it again, and now we're way over the 80 last week. Nice divergence going in. So it's looking like it wants to break, but we need some catalyst to make that happen. So this week, we've got the Aussie CPI figures, which are forecast to come out as positive. So if we get what we're expecting year on year and quarterly on those, we should see some positive movement in the Australian dollar. Australian dollar will drag the New Zealand dollar with it. So we should get some positive movement this week, but it's not coming until Wednesday. Before that, we've got all the Eurozone CPI. So obviously, when you're looking at something like Euro New Zealand, you've got two things that factoring into this, Euro and the New Zealand, obviously. So if we get all the PMI figures coming out as negative on the Eurozone tomorrow, and then we get positive interest rate rises on the Australian dollar, this thing will be back down here probably by the end of Tuesday. Sorry, Wednesday. So good breakdown there on the DAX. So yeah, so this is going to undo very, very quickly. Whenever you get these big, strong climbing up the stairs, you get the falling down the elevator shaft usually. So that looks good as an extension. We got the pound New Zealand as well, which is quite similar. The pound's not been as strong, so it's not moved quite as far, but you can see the price action is the same, and it's all based off of this New Zealand dollar weakness. Yeah, so it's the New Zealand dollar that has been the thing that's been killed. So obviously the pound New Zealand and the Euro New Zealand are going to look very, very similar. So that's nicely extended as well. Again, good divergence on the 4 hour chart. You're extended on the RSI. Good divergence, looking for a pullback. And New Zealand dollar Swiss. Again, huge extension to the downside. I've got 4 positions on this one, and I've got an additional on it. So I got into this when it was extended on the hourly. We did push up. We've got the reverse alert, which has gone in overnight on this. We've just broken yesterday's high, but it's rejecting it. But that's mainly because the Swiss franc seems to be powering up, not really the New Zealand dollars weakening. So we'll see if we can hold this reversal alert. We've got this nice big propulsion move that we got for a couple of hours at the open. So if we can hold this level, there's a good chance that's going to form our W pattern reversal and potentially start a move. But as I said, this one specifically, because it's Swiss franc based, we could well just end up sitting like this for a few days until we know what is going on with Israel. It was on the news this morning. They've been talking about this ground offensive now for weeks. We're going in, we're going in, we're going in. They don't seem to be doing it. So the minute it feels like we're just kind of hanging on, waiting for something to happen there. As soon as we get some confirmation, yes, you are, or no, you're not, the market will know what it needs to do. At the moment, it doesn't know what it needs to do. So it's just being cautious. So with things like the Swissy, they are incredibly volatile. Swiss, the US, and the yen, incredibly volatile to world events. DAX is pushing back up again. So we'll see what happens with the news. But again, I think we're kind of more likely to go into a bit of a holding pattern on this, or the market is going to rally the Swiss franc and it's going to go down further. So our first entry on this one was here. Second entry was there, which was very far away. And as it's coming down so fast and so hard, it's spaced out these entries, which means it's very difficult already to get out of it, even though I'm only in sort of 3 or 4 positions. So I've got an additional entry there. So if we do get this move started, and we're going to add in another one just to bring that down so that I can get out of some of this and start just reduce this down a little bit because it's gone too fast, too hard. Equally though, if the market suddenly goes, oh, right, that's fine, and they pull their money out the Swissy, we'll be back up here middle of the week or within a couple of days, basically. We'll get two big, strong ADR hits on the Swiss franc in the opposite direction. It'll all be undone. But you can't guarantee that at the moment, obviously, with what's going on in the world. So we've got lower low and a lower high going in. We've got bull candle on the DAX, but it is still bearish at the moment. We've got a minute left on this candle. But this is kind of where we finished trading on Friday. So gap fills are never exact. You don't come down and fill, kind of to the pip. You fill roughly around where that move petered out, basically, the previous day. So it could be anywhere in that area. You would class that as gap fill, or I would class that as a gap fill. So we'll see. But still got a massive sell-off on the Dow. NASDAQ and the S&P, but the Dow specifically this morning, really, really, really weak. All the US markets open very weak again. Again, uncertainty. So it's all coming out the stock market and going into that Swiss franc again. They just want money safe. Difficult. Right. See where we go, but it's bearish, still bearish. I'm not going to push this too hard today. If I can get out there, that'll be a good morning on the DAX. Just don't like the fact this Dow has come down. Means it's going to pull back, basically. And the DAX hasn't pulled down as far as the Dow has. So when that Dow and the NASDAQ and the S&P start to pull back, this will pull back as well. But obviously, as this hasn't moved as far, it will probably pull back further, which means if we invalidate that gap, there's a chance of getting potentially into a hedge on this today, but we'll see. So we have got a lower low and a lower high in, so we are still bearish, but quite possibly see an inside bar coming here, I think. We'll see what happens. So that is your RSIs. Nothing else to look at there either, so a bit crap at the minute. We'll go through all the charts quickly. I'll just show you the positions I've got on at the minute and what's going on. I've got a load of drawdown on at the moment, about 15%. Most of that is Swiss franc, CAD Swiss and Aussie Swiss and New Zealand Swiss. So 3, 6, 7, 8. Roughly 50% of that is Swiss franc, which is obviously because of the safe haven run that we've got going on at the moment. So new high just gone in on the DAX. Potential 3-bar reversal forming here. See how we go on. DAX is sitting at a strong daily level. Yeah, we will tank if we can get down there. We've got to get down there yet. See. So I'm just going to whiz through all the charts so we can see what is going on everywhere. Obviously, there's an awful lot of news this week, and today is not it. So I'm not really expecting any big moves today, unless we get anything on financial juice that is relevant, basically. There's no news overnight over the weekend from Japan either. So just looking at oil and the US dollar yen to start with, US dollar yen totally shocked into stationary since the intervention. We had a second kind of rally off of it yesterday. We had another spike come in on Friday. So we are getting some spiky movement, which is indicative of large buy orders coming into the yen. Typically, after an intervention move, we tend to have that shock element, and then we start a move. What we've had here is literally weeks of sideways since the intervention move happened. So I'm still in my short. I'm still getting hammered on this on swaps, obviously. I'm going to be taking some of it off when we get back down to here. Either we're going to get an intervention move, which is going to outweigh that, and we'll be off, and I'll be out, and we'll be done. Or we've got the danger this week of potentially getting positive news on the US dollar, which is going to take this back above that 150 level, in which case then the intervention is probably going to come anyway. So it's just stuck, totally stuck. If you look at all the other yen pairs, nice big strong moves. So there's the intervention move there, and then we rallied back away. We've gone sideways, rallied back away. So the Canadian dollar has even managed to completely undo the intervention, but it's still also sitting there sideways. So big sell-off going on the Dow and the DAX and everything again, still selling off. Getting close to target on the DAX now. This Dow's really dying today. Got quite a wide trailer on this today. So got the NASDAQ. Wow. Big sell-off. It's just about to hit target on DAX. Taking that. Just going to take it off manually. So break even on the second half. Just bank $500. Just because we're at this level. If this is just a gap fill, and then we're going to come up and do the previous gap to the upside, we're going to need to bounce somewhere. And obviously, limit orders are going to be triggering down here, as you can see. So there's no point in letting this come all the way back and potentially this be the bounce and take the money away. So just break even on the second half. If I get stopped out in the second half, be happy with $500 out of this morning. We'll see where we go. If we do break to the downside on this, there's no downside targets available, really, until we get to ODR, is there? So so as I say, you've got to go to the 4 hour to find a level on this. Let's just draw the level in. So I would say that's probably it. So that high, that test. Yeah, so it's just under ADR today. So downside, I would say that's probably where you want to be watching for bounces today. If we get there. I'm not convinced we're even going to get there. What is that level? 146.80. 146. I'm going to leave it where it is, actually, 5R, because that's 147. We've got a big round number coming in at 147. Look, there. Market also has lots of orders placed at big round numbers. That's why we get the bounces at the big round numbers and the quarters and halves. So 147 is the logical place to put it today. So I'll leave it where it is. But yeah, still very wicky, but still very heavy. So hopefully we get a break. If we do get a break, it might be quite a quick flush today. So it might be a decent day today, but we'll see. So yeah, so we're totally stuck on this yen. I have no idea if this is going to be an intervention move or whether we're going to just drop or what. But the yen is suffering from a safe haven perspective. We've had way less money coming into the yen with safe haven with this Israel issue than we have normally. So tricky at the moment to sort of know what's going to happen with it. But we are stuck at the minute. We have on our side, obviously, if it does rally above 150, the Japanese are going to step in, in which case it's down. So I'm happy being short on it. It's just costing me a bloody fortune in swaps. So the longer I hold this, the more I'm going into drawdown on it. Not because it's not going anywhere, but it's just costing me money in swaps. So I just want them to do something with it, really. Oil, still got 2 longs on this one. So as you can see, I've taken a few off of this. So first entry was on the gap fill, in case it was just a gap and go. It ended up being the fill, which is what we thought it was going to be. So entered and exited, re-entered and exited on the gap fill play. I entered again on a break of the high there. So I've got two positions on this, one there and one there. No problem with it coming back. It's just normal market structure. So looking for that high with that position. And then this one is a runner up to $100. So looking good oil at the moment. It's pulling back beautifully. We've got a gap fill to the upside, so we should get some bullish price action coming through this morning. So yeah, hopefully we just come up and test that level. Again, if it does escalate, we are going to big move in oil as well. So there's lots going for oil at the minute. Trailer on the DAX, yeah. Yeah, so just trail the DAX basically. So 2R trailer, so 40 points. Basically, if we are gonna flush, I mean all the other indices are flushing hard, like really selling off. So doesn't make sense to put too tight a trailer on it because it's a bit whippy. So just going to trail it by that and hope we get some, just a strong trend day, basically, is what I'm looking for. But we got to get out of those lows. However, I could do with just grabbing a couple of grand out of it. So if it does flush out the lows here, the thing is, whenever you're looking at a chart, I'm always looking for support resistance. So, we know the market spends its entire life moving from support resistance zones. So we're at the lows. Because there's nothing down there now, it's impossible really to put a target anywhere. We've identified a level that may act as support resistance, but it's quite woolly because it's really old. So there's nothing to look at down there. So all you can really do is stick a trailer on it and just wait for that move to end at some point. You have no idea when it's going to end. And obviously the trailer is down to you as to what you set as to when you're going to get out of it. So if there isn't any support and resistance, all you can do is just trail it and hope that we get a nice big strong day. But always keeping an eye on this. Don't be stupid about it. If you're pushing down out the lows like we are now, and all of a sudden you see price put in an inside bar, then put in another inside bar, then push down and try and break that level and put in a hammer, take it off. Because if we've stalled, can't get further, buyers take control, close it out. Take whatever money you've got there, because you're going to get stopped out on your trailing stop. So I'm always just watching price action. When there's no support, where you're expecting it to get somewhere and bounce, i.e. the market is going to reach for a level, you've just got to watch price action and hope and use it for clues. But equally, there's a million times I've seen a hammer go like that, and all of a sudden it flushes straight out the lows. Doesn't mean anything. Every candlestick is telling you what's happened in that period of time. It's not telling you what's happening next. Yeah. 2 pause candles, bull candle. What happened next? Massive bear. Yeah. Everyone looking at this would have gone selling. Oh, hang on. The sellers have lost control. Yeah. The buyers are definitely back in control now. Whoops. Yeah. Oh, yeah, definitely sellers in control. Look at this. Sellers in control. Oh, the buyers have got control back again. Oh, no, now it's the sellers. Now it's the buyers. See, candlesticks just tell you what's happened on the chart. This is why everyone, when they say, oh, you're a naked chart trader or price action only because price action is king. Yes, it is king, but it only tells you what's happened in the past. Nothing still tells you what's happening in the future. Every time you've got a negative candlestick, the chance of the next one being bullish or bearish is 50%. Or slightly less if you include the doji, because it's that's like the zero on your roulette wheel, isn't it? But yeah, if you've got a decent amount of money, take it. But trail it as well. because you can't be watching the charts all the time. Right, so there's oil. Yep, still bullish. Price target on this is $100 a barrel. So 95 was our initial target on Brent. And this is West Texan, but Brent hit 95 and bounced. 95 is what Goldman Sachs and the other big market participants called. And obviously, that's why it hit it and rallied off, because basically they got out of their positions there, because that's where they said it was going. So now they're out. So we pulled back. Next target they've called is $100, and by the end of this year as well. So we're on our way there. The speed at which we get there will depend on what happens with world events. But at the moment, OPEC are happy with production levels. They're not changing caps, or they haven't said they're going to change caps or anything. So it's just basically a case of waiting for that to rally, and it will take as long as it takes. But yeah, staying long on oil. So looking at the other pairs, Aussie dollar, very sideways, as you can see at the moment, but more bearish than bullish. All these Aussie pairs, especially against the Swiss franc, but all the Aussie pairs basically are fairly weak at the moment, same as the New Zealand dollar pairs. So nothing really moving anywhere. We've got weak, virtually all currencies at the moment are weak. The US dollar is weak at the moment. The only thing that is temporarily strong at the moment is the Swiss franc. So everything is weak. So when you're looking at all currencies at the moment, everything is a weak currency against a weak currency. Canadian dollar should be strong because of oil, but it's not particularly rallying because the US is holding it back. So everything's kind of a little bit like that. And so, which is why you end up getting into drawdown and sitting in drawdown position trading for a long time. So, mine's trailed to break even. Oh, your stop, yeah. Yeah, well, stops. If you're using the stock index hedge EA, that will automatically move you to break even as soon as you close that. The logic is, as soon as that TP is done, we immediately protect the second half of the trade. That's the whole purpose of the break even. Is, you know, if you hit TP on the first half, make sure you lock it in and don't walk away with the loss. But then obviously the trailer's kicking in as well. So there's another 1 hour locked in. So guaranteed 3 hour. Well, not actually, because I only took 1.5 hour. So 2.5 hour basically. Locked in. Made it down to 3. So yeah, Aussie CAD totally sideways. RSI flat, nowhere. I'm not in any positions on this one. Just sitting, waiting. Aussie dollar Swiss, I've got 4.5 on now on Aussie dollar Swiss. So I'm not particularly worried about this undoing this move. We've got a very good chance the Australian dollar and New Zealand dollar will rally this week. It's just whether or not the Swiss franc will also rally with PMI figures off of the euro. So this week is a big news week. It's just every day we've got something that's going to affect pretty much every pair. So it's going to be quite a volatile week this week. But if you look at support levels on this, we are down at previous month's low. Last month's low, we just absolutely flushed straight through it. We've bounced back up and rejected at the moment. So, but this move here is basically because of what's going on with the Swiss franc and obviously buying into safe haven. So. If the market was a person, what would you say to it? That's a random question, Outro. Hello? I don't know. If the market was a person, what would you say to it? Why are you so annoying? I don't know. In fact, if the market was a person, I would say, are you going up or down next? That's the logical question to ask, isn't it? I've done no idea. That's the most random question I've ever been asked on stream. Congratulations, here's your award. So yeah, Aussie dollar Swiss. Very nice level. This is ADR today. Last week's low. Previous month's low. So looking for a pullback on this leg. That's 50%. I think that's very ambitious as a target. But yeah, the problem with this is because of the speed of this drop, the Swiss franc positions I've got on at the moment, the averages are far away. We're looking at like 175 ADR just to get back to break evens on them. So they're going to be quite tricky to get out of. So I've got 4 on this at the moment. I'm looking for opportunities potentially to take aggressive drawdown control positions. This looks pretty good at the moment, but I prefer to take them at good, solid levels of support resistance, and while we're coming down, not while we're going up. So this potentially is a W pattern reversal. This is the next leg. So this would be potentially a good spot to take an aggressive drawdown control position, assuming that we're going to push up. I'd much rather we got a bounce there. I'd rather take that with a stop under that low than assume that this is bullish market structure. That's a hell of a big candle to be buying into. But it might be the right time. I don't know. But I'm not going to get involved with it aggressive at the moment. But, you know, these Swissies are getting a bit deep into drawdown, just because of the speed of the movement with the sell-offs, basically, or rather the buy-intos. Symmetrical triangle forming on the Aussie yen at the moment, but all yen pairs are basically sideways, so nothing to do there. Aussie New Zealand, I've got 2 sells on Aussie New Zealand. Should be getting into a third on that today. No, it's too close. Yeah, so a couple on this one. Obviously, the Aussie might have some bullish news. The thing with the Aussie and the New Zealand is when you get good news on one, you get good news on the other. So, but we are up in a nice area of balance here, which we do seem to be rejecting at. So if this area of balance and this price discovery is going to hold, we should be looking for continuation move to the downside. Probably all going to move on the news. Unlikely we're going to get any movement on that ahead of news. So we'll see where we go. But I'm short on that at the moment. Nice extension on the hourly, obviously, but we are just, again, petering out. The problem at the moment we're getting with so many of these pairs is just this. We're getting these big, strong moves, and then we go absolutely nowhere. Everything resets, and then we get another move. So it's moved into such an erratic market over the last, it's literally been for the last 3 months. Since we got into summer trading, we went sideways. We didn't come out of summer trading in September. We contracted into it. And now we're in October, at the end of October, we're still getting these ridiculous moves where it's just move for 2 days to ADR and then sit there and do nothing. It's just awful. So really tough conditions for position trading at the moment because the market's just not doing market structure in the way it usually does. Still selling off DAX, DOW, NASDAQ. They're all coming down still. So gap fill on the NASDAQ is about to be complete. Dow's already done it, and Dow is at Friday's low already. S&P is approaching as well. So we're getting down to critical levels on these US indices now. So this might be time to tighten up the trailers a little bit. Just lock a little bit more in. Because obviously if we get that bounce on the US indices, it's going to rally the DAX as well. So that's Aussie New Zealand. Aussie US, totally sideways. I've had quite a few trades on this, which have worked out nicely, but we're stuck at the minute. This is obviously a wedge pattern. Typically that would break to the downside, which would require Aussie dollar weakness and US dollar strength. At the moment, we are anticipating a little bit of Aussie strength coming through this week. So we'll see. But that's nowhere at the moment, just sideways. My SIH is set with no trailer. But like today, if I want to use one, do I just set the trailer using the chart? Yeah. You don't need to cancel the EA, just set a trailer. So you just want to, I can adjust this. Look, so if I just change this trailing stop to whatever, MT4 will honor the trailing stop. So you can turn the EF, do whatever you like. Doesn't matter. I'm not sure how this updates. The trailer, I don't think updates on tick and candle. It updates when you initialize the EA. So if you change this, I'm not sure if it would kick in. Let's try it. Where's 1R? 248. Yeah, so it's not changing. So it doesn't update can't update it in there, but you can update it manually. So just right click on it, trading stop, just set it to whatever you want. It's starting to peter out a little bit. So the Dow's broken out yesterday's low. NASDAQ is literally sitting on yesterday's low right now. So we should be seeing some limit orders triggers here. So if we are going to start a pullback, if there's any buyers, I mean, limit orders sit at lows when they want to buy them. They may not want to buy them at the moment. So this is selling off like a steam train today. So, okay, so we just popped yesterday's low. So crucial candle, this one. Not this one, but the next one. So if we get an inside bar form here, that would indicate that they are buying the lows, which could start a pullback. But we'll see. You always got to be aware of what the US indices are doing because of sector purchases. So even though it's the DAX, it's the Frankfurt session, we're trading the DAX because this is where all the volume and liquidity is. The US indices obviously are important because stock sectors get bought up and sold. So if they suddenly start buying up the NASDAQ and the Dow, the DAX is also going to get bought up as well. So they all move kind of in tandem to a certain extent. So it's important to just watch levels and just see what they're doing, because you don't know whether they're gonna, respect support resistance. Even though we're in the Globex session, there's still orders placed at these levels. So, see, but still selling off pretty nicely on that one at the moment. So yeah, Aussie US. I've got no trades on this one at the moment either. This could go either way this week. This week is a really big week for everything. So, you can't really do any analysis this week because all the news kicks off tomorrow and it literally goes on all week. We've got major news with inflation, with interest rates and PMIs, CPIs, everything this week. It's just a big news week. So right now, this thing could fly that way or that way depending on news this week. So sitting there doing nothing at the moment. What's the definition of capitulation on the markets? I don't know. Capitulation. An action of ceasing to resist an opponent or demand. There's a little chart, look. From Wall Street Mojo. This is that thing. I've seen many charts like this. In a normal market, I would say yes, this probably would make sense. But I don't think this sort of thing applies at the moment because we're not in a normal market. Like I keep pointing out, with the S&P, this is the easiest thing to demonstrate what a normal market is. Yeah, this is a normal market. We have a little bit of a bear run, then we have a normal market, then we have some kind of catastrophe happen, but that will last no more than 3 months. Yeah, we don't go into bear markets for more than 3 months. Doesn't happen. Yeah. And then we rally, then we have a little month of a drop, then we rally, then we have a month of a drop, then we rally again. That was COVID. Yeah. After COVID, we had the biggest bull run we've ever had, ever. Yeah. We've now had an entire year of a bear market. We've never had this before. So capitulation, in theory, should have ended here. And everyone was like, yeah, here we go. Oh, crap. That's right. That's another 3 months. Here we go. Oh, crap. Here we go. Oh, crap. Yeah, we're in a constant capitulation. It's just not, this is not normal. I don't think those cycles, somebody posted, I saw it come up on Facebook, or might have been on Financial Juice actually, because they did a webinar actually on fear and greed. I think it was in that actually. So watch that. And they talked about those cycles there. I don't think it exists anymore. Not right now. We've come out of a pandemic into the biggest bull run we've ever had when stocks are losing money, straight into the biggest bear market we've had when a war's kicking off in Europe, straight into the markets looking like they're going to recover everything, getting to top of inflation rate, interest rates, and then all of a sudden another war kicking off. The market is not going to, the market's just going to do what it thinks is right. There is no fear, greed, and all that sort of stuff, I don't think, at the moment, because we're constantly in fear. Everybody's crapping themselves about everything. I don't think it really exists at the moment. I mean, you look at this thing, it's just not normal, is it? This is a big buy off the lows on NASDAQ. This is where you would expect that to kick in. So right now, this could well be exactly where we're going to have that move start. But what happens when Israel suddenly invades and then Iran invade Israel, which draws the US in? It's not going to mean a thing, is it? Market cycles work in a cycling market. This is not a cycling market. This is a chaos engine at the minute. It's just not the same, is it? CAD Swiss. Sorry, just quickly flick back to the indices. So DAX, closing out the DAX here. Maybe right, maybe wrong, but I'm done. Banking 1700. Reason being this big buy order that is suddenly coming in. Now we're down at yesterday's low on the S&P, the Dow, and the NASDAQ. Yeah, so this is the limit orders triggering. So either they are going to get run over because of the speed of this sell-off going on this morning, or the sell-off is complete, limit orders are triggering, the buyers are going to take back control, and we're going to rally up to do the gap fill to the upside. Either way, there's no point in me losing the rest of that profit. So just locking it in 1700 this morning. Right, done on the DAX. CAD Swiss. So longs on the CAD Swiss as well. Obviously, because of the Swiss franc sell-off, we've been extended on the RSI. We're getting even more extended on the RSI. Again, these conditions could continue. So this Swiss franc could just continue to rally based off the fact that the market is crapping itself, and we're going to just keep going into it. So we'll see what happens. But longs on this one at the moment. No support. Oh, no, there is support in this one. Sorry, it's the other one, wasn't it? So we've got this old monthly support, double bottom here. This is the support that's held so far. So we have held this level at the moment. So this is what I'm hoping is going to be, again, buyers stepping in, and then the sellers will basically see the buyers coming in, turn into buyers to exit their positions, and off we go. Again, same problem with this one. Average is absolutely miles away, 200 ADR. So I need a 2 ADR push to the upside just to get back to break even on these at the moment because of the speed of these drops that we're getting at the minute. So very, very tricky situation, these Swissies at the moment. Certainly a lot more selling against the Swiss franc at the moment. So big, strong moves on the Swissy this morning. So we want to watch these lows. So if we can hold this level and just at least go into some kind of accumulation, we've got half a chance of that just suddenly flying off back up to the upside. But see what happens with that. CAD yen, same thing, sideways. Nothing's moving on the yen. We know Swiss yen, same thing. Although the Swiss is obviously pushing. So, but, you know, kind of grindy push. So not really interested in anything on the yen apart from selling it at the moment, because if that US dollar rallies this week, we're off and we'll get some kind of big move on the yen. Euro odd pushing at the moment, just trying to get out of last week's high and yesterday's high. Failing, but no extensions on the RSI, so I'm not interested in anything on that. Last entry I had on that was there, straight in, straight out 2 days later. Another one there as well. So nice RSI extensions, all playing out beautifully on this one, but not a lot of movement. apart from negative on the Australian dollar pairs at the moment, the Aussie and the New Zealand. So that's still rallying. Again, news this week will change that. Euro CAD, no positions on this one. Euro's really strong this morning. Obviously not against the Swissy, but... Or is this New Zealand? No, it's Euro as well. So Euro's pretty strong today. Looks like the Aussie, again, and the New Zealand potentially having a bit of a bad one. But yeah, so no entries on the Euro CAD either, but nicely rallying this morning out of those highs. So not extended, not looking to get in yet. There was a potential entry on Friday. I couldn't get into that one because of the speed of that movement. By the time we got the reversal alert, it would become unextended on RSI. So missed that opportunity, missed that entry. Just sold off again on the DAX. So watch these lows on the US indices. If they don't break, we'll probably pull back from here, but that is the only bull candle we've had, look, since the open. Very heavy. Very heavy. So EuroCAD, nothing to look at. Euro Swiss, no extensions on this one to get into. That was the only thing that was potentially an entry, which was a nice 50% retracement. Couldn't get into that again because by the time we'd actually had some kind of bull action that was strong enough to get into an entry, it had already reversed on the RSI. So no entries on that one either at the minute. Euro pound is just a sideways mess at the moment. We've had a couple of instances where we've almost got extended, but not quite. Nice reversal on the hourly there, but potentially watch this level of resistance. So there's not much downside on it. So again, nothing really exciting. Blimey, really selling off. So yeah, pushing up, but again, news this week. We got news coming in for the euro. We got news coming in for the pound. So all going to change this week. So not really, you can't really say for sure whether this is going up or down this week. We're going to find out what happens with the news. Euro yen again sideways. All the yen pairs. Euro New Zealand, three shorts on this one. We'll be taking a third one this morning. So when we get the 5-minute reversal alert here, I'll be getting into another one. What's the distance? 134. Might need a calculator for that one. Ooh, it's going to be tight. Putting a pending there. I'm going to put a manual sell stop there because I need 100 pips. That's about 90 something. So assuming that this gives us a reversal alert there and it is exactly there, that's just too tight to take another entry, but it is 3/4 of an ADR. So I'm just going to get in with a manual on it. If this basically flip-flops around up here, we get a bear candle go in and then we push up, invalidate that high again and get a nice tight reversal up there, I can get that one off and let the EA carry on and take the short. But I'm just going to put a manual up there because I'm just concerned with some of these positions that I've got on, especially these Swissies at the moment. The averages are so far away because the movement has been so strong intraday. We've had no reversals. So it's just been squeezing like crazy. You can see this whole move here, again, against the New Zealand dollar. Looking for a big, strong pullback into propulsion, 50% retracement on all these New Zealand and these Aussie dollar moves. Euro US, totally sideways mess at the minute. Can't do anything with that. It's just sitting there going sideways. The only two extensions we've had on it, on the RSI, both played out beautifully. So any moves we do get that give a signal, take them in either direction. Doesn't matter which way you go at the moment. There's no power in the US, no power in the Euro. Blimey. 5R target on DAX. You held it. Well done. 5R. Straight down. Nice and easy today. Should have held it. Didn't hold it. Never mind. Money's money. Morning, Tony. Are we missing some news somewhere? My spread just went from 5 to 95. No, I don't think so. I would talk to your broker. If your spread went from 5 to 95, I've never seen that happen ever on any broker I've ever traded with. So I would phone your broker. I suspect it's probably a prop firm, isn't it? In which case they probably just needed to take some people out, because that's what they do. They're dodgy. Euro, US dollar. So yeah, nothing on that one at the moment. Pound, again, very sideways. We are 2 weeks now in this range on the pound odd. The Australian dollar has been very weak. The pound has been very weak. Week against week is a sideways. So not really going anywhere. Same with the pound CAD. So nice big moves going up this morning on the pound. So pound strong and the euro strong by the looks of things today. But nothing really to report on those. They're just totally sideways. Pound Swiss, I had one on from... it was kind of overnight, Thursday, Friday. Target underneath that low where we basically stopped that rally. We sat there for 3 days. We bounced into it and then collapsed. Then we tested it and came back down. So that's basically what I'm using as my target. So not far to go on that to hit target. Could obviously go a lot further. Big question mark over the Swiss franc. So I'm not getting greedy. I'm just taking off what I can where I can. Pound yen sideways, not going anywhere. Pound New Zealand, again, same thing. Got one short on this from Thursday last week. That was the first entry with an H1 M5 mean reversion entry. Target was down in that propulsion. We obviously haven't, because the New Zealand dollar's been selling off like a nutter. So yeah, waiting for a pullback. Big strong move. Very little profit take on this. Tiny little move there, which is kind of more of a flag. So we've got a long way to go to the upside on this. So this accumulation here, which was after the break. So we double bottom break. We sat there, tried to get back through it, and they were like, nope, we're going. So that is where I'd anticipate us getting to the upside, which is about 2 ADR from where we are at the moment. So only got one entry on this one at the minute. We'll scale in up to there, but obviously this can go again either way. We've got news on the euro, we've got news on the pound, we've got news on the Aussie dollar. So lots of news coming in. Pound CAD ADR. So ADR hit on the pound CAD. Wait for your reversal alert to kick in on that one, which isn't too far away actually. Down there. That's an ADR hit. So yeah, pound New Zealand, obviously big move to the upside. Just got the one position on that one. Pound US dollar. Been in this one forever. Waiting to get out. So close to getting out. There's my average. Yeah, just hoping we get an ADR. I just need an ADR of strength out of the pound. That's all I want. Or an ADR of weakness out of the US. One or the other. I don't care. Both at the same time, even better. But yeah, just waiting to get out of this. This is the squeeze. So I'm going to probably do a video on this when I'm out, because I've been in this squeeze now for 2.5 months. 3 months now. So I entered there initially on the RSI extension, and this thing has just been the most hideous squeeze. I've had multiple opportunities to exit this. I've taken profit along the way as well. But overall, it's a loss. So I want to do a video basically showing how much of a loss this is. What did I do with that P&L? I hope I didn't delete that. Check that. Might have. I'll look at that later. So yeah, so just basically big drop. Looking for a rally to the upside, basically. Just to get out, really. Just want to be done and gone and shut. So, but at the moment, obviously, we've gone nowhere for the entire week. We're just flip-flopping at the minute. So we'll see. We got some news this week, but we are holding up. So the reversal we had, the market structure break that we had here. So we We tapped into that area, pulled back, we broke structure. So we got a new higher high there. So there's your high. Then we were looking for a higher low bounce, which we didn't get. We slightly pushed down further into this propulsion move that started that bull rally that made the high. We've tested that. We've held that. So it does look like it's holding nicely here. So big, strong push to the upside. Looking for a new high to go in there. That's going to require a weakness in this US dollar, which at the moment is debatable. It's not really doing anything. It's not strong or weak at the moment. So New Zealand's, obviously, we know they're all big drops at the moment. Got 3 positions on this one. Again, you can see by this one, huge distance between the first and second entries there because of the massive drop that we had. Average is over 150 ADR, and I've only got 3 positions on it. It's just too quick. So being caught off guard on these New Zealands, being caught off guard on the Swiss francs. So got some work to do to get out of all of these. New Zealand dollar Swiss, prime example. So I've got another position I'm going to put on there just to bring the average down, try and get out on a rally back up into this area here. New Zealand dollar yen's sideways. New Zealand dollar, US dollar, got 2 positions on this one at the moment. Again, New Zealand's still coming down. So it's a double-edged sword. I want some strength in the Aussie dollar to drag the New Zealand dollar with it, but I don't want it to go too far because I've also got positions the other way on it. So portfolio's a bit of a mess at the minute. US dollar CAD, totally sideways. Not really moving anywhere at all. US dollar Swiss has been rallying down, obviously. One along on that one. Target is there in that accumulation. And so that was the RSI extension from Friday. And US dollar yen, as we know, completely stuck, waiting for the intervention move to come or for the market to turn around and go, yeah, fine, we'll drop it. So we should get some strength in that yen at some point soon. But it's just, as I say, everything is about timing in all markets. And whenever you get right, this looks like it could be, something happens which goes, hang on a minute, we can't do that now. Like a fundamental, which is why you've got to pay attention to the fundamentals because it's what drives the market. So you get to a point where you're like, oh, this is fantastic. We've had this massive drop. We're ready for a pullback move. At that point, if that instrument gets a piece of negative news, that pullback isn't going to happen because the market participants holding that with a load of profit are going to go, brilliant, we'll add some more. And that's where you get squeezes happen. So in the minute we've got this US dollar yen intervention, which they attempted and failed. Yeah, they can't get it started because stuff's kicking off elsewhere at the moment. So the attention is drawn away from the yen to other currencies. Not interested at the moment. And poor old Japanese have got to sit there and put up with these ridiculously high conversion rates with their major trade partners. Nothing you can do. It will change, but we need world events to let it happen. Really good rejection just coming on the indices. Yeah, so if you're not out yet, that's a pretty good sign. Yeah, pause. Sellers unable to. So this is the first time, this 10-minute period here, first time today, sellers have run out of steam. So if you're not out, that's a 5-hour target hit. Look, there's my target. Spot on. Starting to get some bull market move across the board. So it looks like pullback's underway. I don't care. I'm out. So there's everything, basically. All a bit of a pickle at the minute. Everything. Nextly, the EA didn't function. What are the main causes for that? Couldn't answer. There's a billion things. No idea, Nextly. Don't know. That's a bit of a broad question. That's like saying, why is my car not starting to a garage? And then the garage going, well, can I have a look under the bonnet? No. Why is my car not starting? I don't know. Send a message in Telegram. Look at the logs. Logs tell you everything. So look at the expert tab. See if there's anything in there. Look at the journal. See if there's anything in there. Have a look for some clues. See if there's error messages, messages from your broker, messages from the EA. Jeffrey, Tony, IC markets last month been terrible for scalping around the open. Switch broker if you're having problems with them. Don't IC markets do spread betting? Can't remember. Is it IC? No, it's IG, isn't it? If you're getting crap conditions, change broker. That's what I do. I change brokers all the time. I haven't changed broker for a while, actually, but I do change brokers regularly. If the broker starts giving you crap, change. There's multiple accounts that brokers use. You could have been switched from an A book to a B book, and all of a sudden you're getting different trading conditions because of the way that you're trading. If you're suddenly making profit and they're losing money on you, they'll switch you and you'll get different trading conditions. At that point, you go, I'm moving. And then they'll say, why are you moving? And go, well, because you're giving me shitty trading conditions. And they'll go, okay, how about if we move you onto this account, quick, switching back to the A book, and we'll give you tighter spreads. Okay, brilliant. You stay there for a bit and all of a sudden it gets crap again. And you go, I'm going to move. And they try and hold you. That's what happens. You just have to keep moving brokers. It's my experience anyway. I've pretty much got an account with every broker you can imagine, because I've been through them all, because they all give me great conditions and then they give me crap conditions, and then I move and then I get good conditions with someone else. Just the way it works. But specifically for scalping, the key criteria for scalping is tight spreads. That's it. Tight, consistent spreads, which is why I use Robo Forex, because for the DAX, I get 1 pip spread maximum. Same with everything. Look, it's tight and it's constant. Yeah, these spreads do not change. And quick execution as well. Yeah, it's no use having a really tight broker that takes 2 seconds to execute an order. Market's gone. Like this morning, yeah, I was lucky to get that on today, because that was a big violent move came in. So I had to get a requote on it. It's part of trading. The pain of dealing with brokers. You can't get away from it, unfortunately. With this much volume on the Dow this morning, is the US Open less likely to do much movement? Maybe. Yeah, we might have a quiet open at the US. We'll see. It's earnings fortnight, basically. So what we're seeing here, I suspect, is pre-movement for tomorrow. So if you go through all of these stocks and look at where they're all positioned, you'll probably find that there is expectations for earnings on these. So they're expecting 3M to put in good numbers. So what you're probably finding is you're going to get sell-offs and buys into specific sectors because they're expecting good or bad earnings. So if if Google have said, or for the last quarter, business isn't great, they've got no new products coming out, blah 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 blah, you'll probably want to pull your Google stocks before the earnings release, because if the earnings release comes out as a negative, you probably want to buy the stock back once it's dropped. And obviously you don't want to take a hit on the stock if you're in it. So you remove yourself from the stock, wait for the earnings. And then when the earnings come out as good or bad, you can then make a decision, can't you? Same with Microsoft and all these big players. So we've got a lot of big names releasing tomorrow, pre-market and aftermarket. So what we're seeing here is probably a lot of just volatile buying and selling. Also, obviously, the stock market sells off when there's problems. We've got a big problem in Israel at the moment, and we still haven't got any answers as to whether or not they're going in. And if they do, who's going to attack Israel after they do? And who's going to back them up after they do? And to what degree? So in a fearful market, the stock market is what gets hit. Yeah, all the money goes into safe havens, gold, Swiss franc, yen, US dollar, comes out of the stocks. So there's a number of things this could be, but the why is irrelevant, isn't it? It is. So you deal with what is going on. What's going to happen this afternoon at the open, I don't know. Are they going to want to sell more, or are they going to want to buy everything back they sold this morning? I don't know. Israel could suddenly start a ground invasion at 11 a.m. this morning, which means the US market open is going to be an absolute crapshoot, isn't it? Just don't know. But if you, the thing with trading is if you are fearful of what is going to happen, you will never do anything. You won't take any trades. If you're thinking, oh, I'm not going to trade the US Open because we've had a big morning. What if you have a big morning 3 days on the trot? You're not going to trade. And if every single one of those is a beautiful opening range breakout that goes to 5R like today, that's going to make you cross. Just get in, deal with it. You just got to deal with the situation. We never know what's going to happen. And what's happened this morning may or may not have an impact on this afternoon. The only way we're going to find out is to look at it this afternoon, isn't it? But quite often when we've had big ADR days, we do have contracted opens. But I don't really know why this is today. It could be a number of things, couldn't it? The fact that all sectors have sold off at the same time, I would say is quite possibly just the market, again, just being a little bit scared and cautious about what's going on with Israel at the moment. We just need to keep our eyes peeled, basically. Nothing you can do. Swiss franc, obviously, we know there's a safe haven run going on, or was going on this morning into the Swiss franc as well, but that seems to have abated. Look. So the run into the US dollar's coming down hard still. Look. So pound US. See, this is, again, when you try and tie things together, we know that when the US dollar rallies, the stock market drops. We know that when the US dollar drops, the stock market rallies. What have we got today? The US dropping and the stock market dropping. So something's out of kilter, isn't it? Something's out of whack. What it is, I don't think anybody would ever be able to tell you. It just is. So you just got to deal with it. But as traders, what do we need to make money? Volatility. What have we got now? Volatility. So use it. But don't worry too much about the why. Do you ever look at the FTSE? No, because I don't have it. It's one of those weird instruments that most brokers don't seem to have for some reason. I've got 3 broker accounts and none of them have the FTSE. I don't know why. Just don't. But I just don't trade it. But there's nothing wrong with trading it. The open is the open, and the FTSE will be opening as much as the DAX is. The FTSE does tend to be more contracted, so I liken the relationship with the FTSE and the DAX akin to the S&P and the Dow. Yeah, so you've got one that's got 40 stocks in and one that's got 100. Yeah. So the FTSE is a more volatile thing. So there's the FTSE today. So it's sold off as much as the DAX, isn't it, really? Yeah, very similar. Axie have got the FTSE. Axie have got loads. Axie's one of the best brokers I've ever traded with. But look at the spread. Can't scalp it because the spread's too big. Yeah, look at that. Look at that spread there. That's 4 points, 4 pips. Spread on the DAX is literally nothing with Robo Forex, which is why I don't use Axie anymore for small time frame trading. Use them for big time frames, position trading, H1, no problem, because the spread's pretty much irrelevant when you're looking at hourly, multi-day swing trades. But for scalping, it's terrible. Too big a spread. Pound US dollar's rallying nicely. I'm going to get out of this today. I'm almost tempted to hold it, you know. Now that this move is potentially starting. If you look at the... Just, I know it's a scary, dangerous thing, but... we are going to shift structure and start getting a weak US coming in. It's almost worth waiting until tomorrow morning to see what we get. We'll see. Morning, Peter. Too late today due to traveling. It's weird how addicting Lee's live stream is. Oh, I'm a drug. That's nice. I like it. People are getting addicted to me. Bit of a weird thing to get addicted to, but anyway. Each their own. Right, that's all I've got for you this morning. Unless there's anything else anybody wants to look at. Nobody's asked for it for ages, so I'm going to do it anyway because nobody's asked for it. So, which is weird because I get asked for gold every single day, and then all of a sudden it goes quiet and nobody asks for it anymore. But gold at the moment, because the US dollar's dropping, will be going up. Funny that. So obviously, with the weak US, obviously we're going to get gold moving up because it is just a US dollar cross. However, at the minute, we've got this massive safe haven move going on. So the gold on the Swiss franc, you're going to find will do the very, very similar thing because people buy gold when we've got times of crisis because it's a tangible object in demand. There is limited supply, therefore price rises. So a little bit like oil. So gold at the moment obviously is a big buy with what's going on with Israel. Obviously, when that stops, you'll find that the gold price will drop down because people will pull their money out of gold and put it back into where they had it before. Stock market, other currencies. Yeah. So same with the Swiss franc. This will come down. The Swiss franc will come down and it will go back into the stock market. So at the minute, obviously, it's a good looking buy. We've just had a reversal alert this morning. From this high on Friday. Beautiful 3-bar reversal there. Look, there's a perfect example of a 3-bar reversal. Push, pause, pull. Off we go. So yeah, potentially if we're going to get some clarity on what's going on in the Middle East, we will start to see some kind of decline on this. But that's going to also require I think a decent US dollar move, but we'll see. At the moment, that rally there was what kick-started it. So we had a move there with 630 pips. ADR on this is can't read that, 267, I think. Something like that. So yeah. Yeah, ADR is 267. So we had this massive bull run when the Swiss franc lit up, which was the Friday before last. Of pretty much 225 ADR. So since then, hasn't looked back. They've just been buying gold. So at the moment, it's kind of still a buy, I would say, until we get some clarity. But we are also hitting a resistance. So we may find that this is where those limit orders that triggered on Friday hold up. Who knows? We will see. Morning, XR.news. You're late. Hope my missus is getting better. Yeah, she is. Not COVID. Still, it's cold. It's winter, isn't it? Everybody starts going down with stuff. I felt like it over the weekend a little bit, to be honest. I still do today, actually. Just feel a bit like... I'm expecting to get down with something who's been on a plane for a few hours. Yeah, planes too tend to do that, don't they? You just get ill because you've been on a plane. Did you turn DD control on the MRAEL? Yeah. Yeah, I'm doing manual drawdown control. Same as I used to. DAX still coming down a little bit more. This might be part of a pullback and a continuation today. So watch this today. I mean, I'm out of it now anyway. You should be out of it anyway after that break. So whether you took the ORB or you took the stock index hedge version, you broke short and you've made money. So should be stopping. If you try and get in again and you lose the money, you lose the money. I've done about 8% in drawdown control and it hurts my soul. It does. You will do. If you got basically, this is the thing. We talked about this on Friday, I think. Friday morning or afternoon, I can't remember. But if if you're doing automated drawdown control with the EA, it's a double-edged sword, because you are going to be in a lot less drawdown because you're scaling out positions, therefore you're taking less drawdown, but open drawdown, that is, but you're going to be taking losses on the account. So it's good in one respect because you're in smaller drawdown and easier to get out of the positions. In another respect, it's bad because you're actually taking losses on account. Whereas if you're not doing automated drawdown control, you're going to be in bigger drawdown like I am, but I'm not taking losses on my account. There is no right or wrong. They're just different ways of doing it. Manual drawdown control is just as good, and it's the way I've always done it. But you'll take more DD here. The reason I'm not doing it at the moment is just because I was finding getting too many positions were taking losses unnecessarily. But then again, when you get into squeezes on the Swiss franc like this, you're thinking, I wish I had, and I was sitting in only 8% now instead of 14%. And it's harder to get out of. Look, I've got to go a lot further to get out because I haven't been closing positions on the way. That average would probably be somewhere like that and much easier to escape. But this Swiss and New Zealand moves are just pushing back up again on the DAX. These Swiss and New Zealand moves are very big moves. A lot bigger and a lot faster than normal because of what's going on. Morning day trader FX. Slept in, broke, sober October. Didn't even do sober October. Dry January I tend to try. Not very good at that either. Do you plan to put automatic drawdown control back on? I don't know. I might do. I'm, as you know, AZ, there is no rules. I don't have any rules, so I do what I like. It doesn't matter what you do. If you have automatic drawdown control on, you might have a losing month, whereas if you didn't have it on, you have a winning month. It's just, it is trading. Manage it however you like. The option's there for both. There's no right or wrong. If you go back and look at my live streams, I started doing automated drawdown control in April. First time I've ever done it. And I kept it on for 5 months. And now I've turned it off again. They're all profitable. Well, they're not all profitable months, but they're profitable months. It's a profitable period. Before that, I was profitable with it turned off. So, personal preference. I would say if you're fairly new to position trading, I'd leave it on just because it takes a bit of the pressure off. But I might regret it. You know, I might take more drawdown and have a worse time because I haven't been doing it. I'm not doing any drawdown control at the moment because I'm not sure whether it's right to do drawdown control at the moment because I don't know if these moves are real or just because of what's going on in the Middle East. We'll find out, I suspect, this week because we're going to get this thing, I think, probably kick off this week. But if it doesn't happen again this week, I think the market's just going to go, well, it's not happening, is it? And it'll all unravel anyway. I don't know. Difficult to tell at the minute. I feel really sniffy now. We've been talking about colds, and now I think I'm getting a cold. But then with Aussie dollar Swiss, you can decide to close early position and move average closer manually, so you control the drawdown better. Yeah. So something like the Aussie Swiss, you know, when you're sitting on a position like this, I've got these 4 positions on. There's 2 things I can do. I can either go, right, this looks like it's going bullish. I'm going to add another position on and bring the average down. Or I can say, right, I'll close half of that one off and I'll close a third of that one off and just get the average down. I can move this. This is the beauty of position trading. If I'm not happy with my entry price, I can change it. That's the whole advantage of position trading and being a position trader. I'm not reliant on my entry being there. I can move my entry down. I can move my entry up as well. If I take half of that position off, that moves up. If I take half of that position off, that moves down. I can change this line, which is my entry price, however I deem fit. I would obviously never take a position off below your average, because obviously you're just making your situation worse. You're taking a loss and you're making it harder to get out. You never do that. But that's the beauty of it. Your choice, isn't it? So how you control it, whether you do it every day, whether you do it after a specific distance, or whether you decide, screw it, I'm just going to take that one off completely and take a loss of X. There isn't a right or wrong way. This is why you need to watch where your positions are and check your P&L on a regular basis to see what is causing you problems. Stuff that's causing you problems, think about dealing with it. If it's not causing you a problem and you're not particularly unhappy with it, don't deal with it. But everybody's got a different pain threshold, and everybody's got a different level of drawdown that they're uncomfortable with, which is why I say in the bootcamp, do drawdown control when you're uncomfortable. I can sit here and be in 25% of drawdown and be uncomfortable, whereas other people might sit in 10% of drawdown and be crapping themselves. And that is down to individuals, and it's down to your risk tolerance and all sorts of things, your experience. There's too many things going to the pot to have a set of rules that is just, this is what you need to do. You need to do it, experience it, and figure out what is right and wrong for you. Same as strategies. Time frame. I get asked, what's the best time frame for the market reversal alerts indicator? I don't know. What's the best time frame for you? And people are like, what do you mean? What's the best time frame for me? Well, can you sit there and watch a 5-minute chart all day long? No. Well, then the 5-minute isn't the time frame for you, is it? Do you have a full-time job? Yes. Well, then you can't trade less than the H4 chart, can you? Because you can't look at the charts. Well, I could look at the charts maybe every couple of hours. All right, well, then let's put you on the 1 hour time frame. Yeah. There's no, it's what is right for a trader. You've got to try everything. And this is why this is such a difficult thing. You go and do 10 courses and none of those courses click. It doesn't mean you're a bad trader or a bad learner. It means those courses aren't the right courses for the style of trading that you want to do as a human being. Everybody's got a different thing. Some people trade the daily charts because they just want everything to be slow and they want to put big sums of money and invest it over a long period of time. Other people want to be in and out today on a 5-minute time frame and make $1,600 to pay the mortgage. So you want to be trading a different strategy. This strategy is for you. If that's you, if you're the type of trader that doesn't like this because it's too risky and it just scares you, then you need to be position trading or swing trading. But until you try, you won't know. M1 scalping, go and scalp an M1 chart. See if you like it. See if you find it exciting. If you do, that's the scalp. That's the time frame for you. It's like a job. You go and try different jobs, and then you find out what job you like. Time frames, strategies, styles of trading are all exactly the same sort of thing. And again, within a strategy, position trading is a methodology. It's a way of scaling in and out of the market. There's no reason you should use the RSI. That's what I use because that's what I've found to be best for me and what I like to do. But you could use Bollinger Bands or moving averages, Keltner channels. I don't know, anything. Use anything you like. Something that tells you something has happened and something should be happening next. Make you move and wait, and then deal with what happens afterwards, because what happens afterwards is absolutely random and nobody knows what it's going to be. So pick a strategy that suits what you do and how you want to execute it. Like you say, I'm getting the EA to get me in 3/4 of an ADR apart at the moment. You might choose half an ADR or one ADR. One ADR is going to make a lot less drawdown on your account than 3/4 of an ADR. Half an ADR is going to be much more aggressive. However, if you get a swing right within 3 positions using half an ADR and you hold it, you could put 5 or 10% on your account in one trade. But it's aggressive. So there's nothing wrong with either of those strategies. It's just that one will suit one and one won't suit the other. So, and you can interchange it. And this is the beauty of it. I traded H4 up until December last year. And in January, I decided to switch over to H1 and stay on H1, whereas I've been an H4 trader for years. And I decided to flick to H1. I'm still trading the same thing. the same. It's just a mean reversion strategy using positions. I'm just doing it on a slightly faster time frame because it's a little bit more exciting than H4. I'm getting into more drawdown and it's more difficult. And I have to say, I am making a little bit more money out of H1 than I did out of H4, but not masses, because I still close positions out too early. That's something that's not going to change because that's me. But you can flick time frames, you can flick all sorts, you can do anything you like. Because you still, it doesn't matter, no one can come up with any strategy that's ever going to predict the future. Unless you invent a time machine, it doesn't matter what strategy you use, it's not going to work. Yeah, you just need a strategy and you need a thing to execute the strategy so you don't have to spend your entire life locked into charts, which is what EAs are for. There you go. So I don't know if I'm going to put a drawdown control on again. I might do. Depends how lazy I am, really. If you think about it, all EA is laziness. It's just can't bother to do it myself, so I get something else to do it for me. But it does things too mechanical sometimes, I think. What EA are you talking about right now? I don't know, Robert, because I don't know what I was talking about then. All my EAs, if I would only ever talk about my EAs, they're all on the website here. Go and have a look at them all, and you can probably figure out which one I was talking about. I don't know which one it was at that time. Oh, drawdown control. If you're talking about the one that's about drawdown, that's the market reversal alerts EA. This one does automatic drawdown control on positions. Come on, website. Blimey. There we go. Market reversal alerts EA. Oh, that's slow today. Monday hasn't woken up yet. I've had almost all my gains for the last 2 months wiped out by DD, almost back to break even from 15% up. Yeah, happens. Not often, but happens. I've had a bad quarter. But yeah, I mean, so my September was minus 8.5%. My August was 6%. And my July was 24.37%. So when you add all those up, it's 30 minus 8. I've done 22% in the last quarter. Takes a lot to wipe out, but you know, again, no one's going to get the same results. Some people have done, like last month. Yeah, I had a losing month last month. Don't get them often, but September was a losing month, 8% down. Some people in Telegram did 15-20% in September. Yeah. Using exactly the same strategy that I'm trading. Yeah, it's not about the strategy. It's about how you execute the trades and which instruments you get into and what you do and where the orders are. If you enter a trade there, and there, you're going to be in the same situation as me. If you entered a trade there, and there, yeah, you're going to be in a totally different situation to me, right? And when this thing pushes up to here, and that is your break even, right? Whether you close that out there or the news event tomorrow moves it to ADR and you close it out there is going to make the difference between you having a 10% month and a flat month. Yeah, that 24% September month that I had, right? Other people were having terrible months, 4, 5, 6%. It's the same strategy. You're trading mean reversion with position trading, and you're adjusting your price using orders. Yeah, there is no way anyone's going to get the same results. So if if you've wiped out your profit, that's unfortunate. But in the last quarter, you haven't lost any money. So you've moved yourself from a losing trader to a break-even trader. That's step one in becoming profitable. But, you know, you can analyze every trade, and you will always in a trade Like if you look at any trade that hasn't worked out, there's always a what if in there. Yeah. So I entered there, I entered there, I entered there. Yeah. What if I'd have closed out those 3 positions at break even there, because I would have had an exit at break even there, or maybe a 0.5% loss. What if I'd have done that? What would my September have looked like? It wouldn't have been an 8% loss month because I made 9% loss in that part there. It would have been a positive result. What if I'd have done that? What if you hadn't have done X? Doesn't matter. There's nothing you can do to... I didn't know at that point when I had an exit, this was going to collapse for a month and a half during a period of what should have been high volatility, which wasn't. I didn't know September was going to be worse than August from a volatility perspective. And I didn't know that the US was going to rally when it shouldn't have been because they weren't increasing interest rates. Yeah. If I had have, I would have done something different. If this gets back to break even today, what if I take it off there? I'm out of this after 3 months. What if I leave it and it goes up to there? That's the difference between a 25 to 30% month this month and potentially having to do drawdown control and come out with a loss. Every single decision you make as a trader is going to affect your P&L differently. And the difference between having drawdown control on or off on the EA is going to affect your results differently. Yeah. Whether or not I close this, if I was to shut this order here right now, that one, my average would jump down to here and I could get out of this in the next 1 hour. If I don't close that out, I won't. That one single decision is going to make the difference between a profitable or a non-profitable month, because what happens when I get out of this will have a direct impact on all the other positions in my portfolio. If I've had a month like I'm on 14 or 16% profit or something this month, 15%, yeah, that's why I'm holding drawdown, because I've got 15% in the bank at the moment. Yeah, so I'm holding some drawdown because I'm comfortable, because I've made a load of money. I've got a buffer. If I was sitting in 2% profit this month, I'd be making very different decisions because I would be in a different situation. Yeah, the decisions you make on every single position that you're in are related to the other positions, which is why you can't backtest position trading, because you don't know what situation you would have been in on your entire portfolio when you get to that one trade, where that one trade is a break-even exit that you've been holding for 2 weeks. If you make the decision to close that, it could be because you've made 22% this month and you want to get flat because it's the last week of the month, or it could be that you've made a 2% loss so far this month and you're going to hold this because you need some money. EAs can't make those decisions. You make those decisions. You're a trader. And the only way you're going to know which decision to make is by doing it. You can't, there's no shortcut to experience. You can't, apart from using a strategy tester, obviously. You can see what has happened, but again, you're seeing one tiny little thing. And again, being aware of news, people still post in Telegram, and it still drives me nuts. What the hell just happened? Did you see that spike on the US dollar yen? Yeah, we just had a massive news event. Where did you find that out? If you're paying attention to it or not paying attention to it, that's the difference between a profitable and a non-profitable month. Literally. If you're anticipating something coming and it happens, you can make a killing. If you're not anticipating it coming, you won't do anything about it. You could even take a loss on it because you went the wrong way, because you weren't anticipating what was coming. There's so many variables, so many factors. And as I say, every single candlestick means nothing. I just said this morning, literally within the last hour, oh, look, the US dollar's weak this morning. Everything's rallying against it. Not anymore. While I've been talking, it's all changed. Everything's flipped to the opposite direction. Indices are starting to go up because the US dollar's starting to power up, which is the opposite of what it normally does. Nothing is normal in this industry. You are trading something that is completely random, driven by 10 banks who are not talking to each other and doing their own things. There's no way in the world you can tell what's going to happen with this or how much money you're going to make or lose every month. It just isn't doable. It's just the unfortunate truth of trading. Sorry, maybe you talked about it already. Have you done some more testing on your new hedge strategy? No, I haven't done anything more this weekend. It's on the list today. That said, the dashboard says if I can hold my positions until I hit profit, I'll be up just under 20%. Exactly. You've seen how fast it moves. Yeah, I've said it before and I'll say it again, and it will happen again. I've been in here in the live room in the morning and I've said everything's quiet, nothing's moving. I'm in X%, 8% a drawdown, 7% a drawdown, whatever. And then I come onto the live room in the afternoon and I'm like, I'm flat. I've just banked 16%. From 8% negative to 16%, whatever, that's not that much, but from negative 8% to being flat and having banked 2 or 3%, literally in a session, because all it's going to take is one piece of news for Israel to come out and say, having discussed with our close allies, we have decided to halt the ground invasion. CAD Swiss will be up here because everyone will go, right, everything out of the Swissy back into the stock market. The stock market will go absolutely Looney Tunes through the roof. The Swiss franc will go through the roof. The yen will power up and everything will be like, that P&L will just go into profit because one person in the world said one thing that came up on a news feed on the internet. Yeah, it's that fickle. And you could hit that target within 2 to 3 days this week because we've got nothing but solid news. We've got PMIs all week. We've got CPIs. We've got interest rates. We've got everything. Literally everything you could possibly imagine as high impact news events all week for every single currency. The entire situation could either get twice as good or twice as bad in the next few days. No clue. Just got to deal with what you get given. And some months it's going to be good. Some months it's going to be bad. You can't tell because if you knew that, you would do it. And this is why nobody's, if Warren Buffett can make 8 to 12% a year off of billions, yeah, if someone with his firepower can't make more than that, how would you expect anybody else to be able to see into the future? Just can't do it. You take what you get. The market gives you what it wants to give you when it wants to give it to you, and it only gives you what you get based on the decision of going long or short. That is all that makes a difference. You have a 50-50 shot of pressing the right button. No indicator on the planet can tell you which way that button needs to be pressed with any accuracy that will give you an edge. The only things that give you an edge are risk and reward. Risking less than you get back and having a strategy that has a chance of executing that edge at specific times. Other than that, which is what the opening range breakout strategy is all about. Yeah, we know for a fact at 8 a.m. every day, this thing goes nuts. At 2:30 p.m. in the UK every day, this thing, and this thing goes nuts. That's our edge. We don't know which way it's going. We know it's going. So we can use that. Yeah. With Forex, everybody's trying to find the holy grail indicator strategy that will tell them how to trade the Forex markets. You can't because there's no edge in the Forex markets because they just do whatever the hell they need to do based on the fundamentals. So you can have an idea, but you can't have a strategy you can execute with a solid risk reward that I've found that will give you an edge in something that is random and moves so slowly. So what you need to be able to do is adjust the entry price. So if you get in and it's wrong, move the price because you can't pick the timing or the direction of the movement, but you can adjust where you get in. And you don't have to get in and take a loss and then get in again. You can get in and just move the price, which is what position trading is. But it doesn't work in other markets like stock indices. So you pick the strategy for the instrument that you're trading. You can't hedge in the futures market, so you can't use hedging strategies. You can hedge on CFDs. You just got to pick what works for what instrument. High volatility and low volatility instruments have different strategies. Aussie New Zealand is something that's good for mean reverting most of the time, unless the Australian dollar interest rate goes up and the New Zealand dollar interest rate goes down. Then it's not good for mean reverting anymore. So what do? You have to stop trading that strategy on it, which means you can't use an EA because no EA works in all market conditions because the market conditions change constantly. You can't pick one, can you? You need multiple strategies. Morning, Mark. What's the main difference between the SIH EA and the opening range breakout EA? Basically, using stops or not using stops. And logic. Go and watch both videos. Yeah. So watch the opening range breakout EA video and then watch the stock index hedge EA video, and you'll see the difference. But basically, one of them hedges the market, one of them uses a stop loss. So stock index hedge places a pending order there and there. If the break works, we win. If the break doesn't work, we hedge and we wait. And then we get out later with a loss recovery strategy. The opening range breakout EA. Why my terminal's not working? We'll place an order for the breakout with a stop loss. So if it breaks short and then goes back up, you take a loss and you flip long. If that then fails and you stop out, you take another loss and wait. If we reset in the middle of the range, you take another breakout. So this one, you can stop out multiple times. Stock index hedge, you never get stopped out. But you will also lock in a loss. So stock index hedge will only ever take one trade a day. You enter the market in the morning, it either works like it did this morning, or it doesn't work, and you sit there and you wait. With the opening range breakout strategy, you get in and out. It's a scalping strategy, so you get multiple cracks at it. But everything's got a downside. The downside to the opening range breakout strategy is if it goes like that all day long, you're just going to get chopped to death until you've hit your maximum loss, and that's it. And you walk away and go, that was crap. But then days like this, you're going to go, holy crap, I just made 7.5 grand. But the beauty of the stock index hedge EA is, and in my opinion, this is why I prefer the stock index hedge strategy to the original ORB, is because I get to win on those days too. But on those days, I don't lose any more than one risk. And I still have a chance to get out of that risk. And that's the beauty of it. So if you look at last week on Friday, I got hedged, I went long, it didn't break long, went short. So we hedged, we waited for the bounce, exited the short, added a second long and exited the long, walked away with a profit. But we only took one trade, which was a hedge. So it's to me, it's the best of both worlds. And it's a much safer strategy for those doing prop as well, because you've limited your risk. So whatever you make your risk on the range, so here, for example, so that's the range today there, yeah, which is 232. So if you risk 1% on 232 pips, that's it. If it does that all day long, right, and doesn't hit your target, maximum is 1%. That's all you can lose. Unless you exit and it pushes back and then it collapses even further, in which case you're going to take a much bigger loss, but it doesn't often do that. The vast majority of the time, it does things like this. Absolute collapse, pullback, market structure. That's what we have, isn't it? Market structure. So this is doing market structure now. It's either going to do that or it's going to do that. We don't know, but the market structure has always got a pullback in it. So the advantage of the hedge strategy is you can get out on the pullback. So you exit your short with a nice profit and you exit your long with a loss, which is smaller than the profit, giving you a positive result for the day. They're just totally different strategies. They're based around the same thing, the open. It's to do with the opening range, the pre-market range and the 5-minute opening range. This one, the stock index hedge, works for the majority of the time on the pre-market range because this one is working off of percentages of ADR. The edges that we only take breaks which give us an edge that we can achieve, which is between 10 to 20% of its average daily range. If it's any bigger than that, we're not interested. We don't trade it. So it's got more rules. It's got more logic in it, if you like. But that's only come from what I've tested. Because I've been trading the opening range breakout since February, March, brilliantly, and it's been good. But there's, for me personally, there's a niggle factor in it, which is the rotation days, which is what I wanted to try and get rid of. And I tried to find a way of taking advantage of those rotation days with different strategies, different entry strategies after the open has failed. And I accidentally hedged one on one of the tests. And I was like, oh, if only that happened every day. And then I tested and found out, Jesus, it does happen around about 45% of the time. So if we can win 55 to 65% of the time and hedge 25 to 35% or 45% of the time, that's an edge. So I stumbled across this variation a little bit by accident by trying to develop the original strategy further. But that's how things tend to happen. The best back tests I've ever had are where I've gone, right, I'm going to test this. It looks terrible. And all of a sudden you're like, blimey. Like a simple break above a moving average and then get out when it breaks below moving average, always in strategy. The simplest thing in the world. If it's above that, go long, get out when it comes back down below it. Doesn't get any simpler than that. A child or, my dog could execute that strategy. Works because it's simple. It's really simple. The simplest strategies are often the best. Let's go for a breakout. If it doesn't work, let's just not. Let's take a hedge. Let's lock in our loss because we know that more than 50% of the time it does go on the day. So therefore, if we can just deal with the ones that are losing, which is what I was trying to do, is trying to do some kind of loss recovery on them. Don't worry about loss recovery. Just lock them in as losses. Take them. You take one trade a day, yeah, and 3 out of 5 days, you can have a 2R win. You're done. And happily, the stock indexes break around about 3 out of 5 times like they did today. So there's an edge. It's just an instant edge. The ones where they don't and it goes like that, just lock in that loss and take it because it's always going to be smaller than the 2R runs you get. We're locking in 1R. We're taking a 2R. It's always going to be bigger, isn't it? So the edge is there. But it's a long-term edge. It's not going to work every day. You're going to have a week. We had a week. Last week before last, literally every single day hedged. Almost every day hedged. So there's no, again, I keep saying it, there's no better or worse. There's just different. Unfortunately. If there was a better, we'd use it all the time. It's crazy not to pay attention to global news when you're trading global currencies. Exactly, yeah. As you're talking about futures, the first in, first out principle drove me crazy. Yeah, that's the thing I hate about futures. Futures really teaches you to pay attention to support and resistance. Because in futures, you get chopped so unbelievably much. It's just unbearable how much you get chopped. So you go long and it comes down and it stops you out. And then it pushes down and pushes back up and again, and you go short and then it stops you out. And then you go long. And what you find is you're doing that. What you should be doing is paying attention to that. And you see this in futures. This futures really makes you understand how the banks and the algorithms run support resistance and how they pay attention to support and resistance, and which is why we pay attention to support and resistance, because that's what the market does. It moves from support to resistance using market structure. And futures will teach you that very quick in a very horrible way, because you have to exit your position one direction before it allows you to go back the other way. And what you end up doing is taking loss after loss after loss after loss after loss. And then you suddenly realize, if I'd have just done the opposite and sold at those highs and bought at those lows, I'd have made a fortune. But it teaches you patience, because when you do take that trade, when you do take that one and it doesn't work out, you don't take any more trades unless it comes back to that level and you short it again, or it gets down to the next potential support. So suddenly you get patient in futures. I've sat there in futures sessions and gone, I've no idea where this is going. And then I've looked at the watch and gone, oh, I've got to go out. Because I've been sitting there literally waiting for it to go somewhere, and you don't do anything. You don't press that button or pull that trigger until you know it's getting to a point where there's a load of other people going to do the same thing, because it's all driven by everybody else in the market. Very good thing to trade futures. Test it. Try it. Teaches you a lot. Not usually in a good way, though. Very hard. Oil is the next buy leg. I'm already long, but yeah. So, assuming we're going to continue our rally to $100 a barrel, then yeah. Perfect buy. We are also got a gap. So we've got a gap fill here, look, as well. So just be aware that they may be just running for the gap. But yeah, it certainly looks like it. Right, I'll leave it there today. So good session on the DAX. Nice easy break today. Nice easy money. FX, obviously, we just have to wait. Today's a very tricky day because there's no news. So market will just do what the market wants to do today, really. We just have to wait and see what it does and where it goes. I suspect we're probably going to get a load of that, really, because there's no reason for it to drive anywhere at the moment. Pound CAD's the only ADR we've had, and as you can see, straight off of ADR, there's your reversal alert, straight in, straight out. There's no reason to go anywhere today, so we might find we just get the market moving up and down in rotation. Franco killed gold tonight. Good move. Wasn't easy, never is. If it was easy, everyone would do it. Because it's hard, that's why we do it. So yeah, there you go. I'll leave it there. Anything else you need, let me know. I'll be in Telegram. But back this afternoon for the US session, as usual. We're trading the NASDAQ, the Dow, and the S&P. Yeah, see if we can milk a little bit more out of those this afternoon. But just keep your eyes peeled on financial juice, really, today. The only thing that is really going to move this is any news that comes in with either an escalation or de-escalation in Israel. I think at the moment the market seems to be scared to death, selling the crap out the stock market and buying the crap out the Swiss franc. So we'll have to wait and see what happens. But at the moment, sit and hold on type of thing. That's why I trade the NASDAQ. It's like a Chihuahua driving a Porsche. Yeah, exactly. It is. That's a good description. But it's also very lethal. Yeah, if you go and trade the NASDAQ in the futures market and then you trade the Dow and the S&P in the futures market, the NASDAQ is the one that kills you because the movement is so fast and you get so many false signals. So it's almost like the NASDAQ. What you want to really do on the NASDAQ is move up timeframes. Yeah, it's almost like you need 5 minutes sometimes is a little bit too quick. 15 minutes sometimes is a little bit too slow. You kind of need a 10-minute chart really on the NAS to really appreciate, I think, the speed. 15 minutes probably a bit better on the NASDAQ, I think, because it's stronger. The moves are stronger and they last longer, but you get a lot more of that while it's on its way there. A lot more wicks a lot of the time. So each to their own. Everybody likes different instruments, don't they? Some people only trade the NASDAQ. Some people never touch it. Try it. That's all you got to do. Try everything. Jerry, Ken Griffin fund performance, quarter two, 12.32%. Okay, if you say so. No idea what that means. Excellent news. Held trades over the weekend. Was in drawdown. Last candle on Friday was in my favour. Shot further. The Aussie Open was not reflected in my balance. Market reversed, went back up and missed it. Is that the swap or slippage? That'll be spread. So if you get the Aussie dollar and New Zealand dollar specifically, you get a lot of big candles. Yeah. So look at this. That's just where they've spread the market. But price you would never have got executed there because you get executed off the other line. So they can put that one down there and leave that one there. Just Aussie Aussie and New Zealand are the worst. Look, that spread. But you wouldn't get executed down there. It's kind of spread and slippage, really, because the other thing is your broker, if they're executing in dark pools, there won't be orders out there for them to fill. So you sign a contract with your broker to say, fill me at the best available price you can get. And most people assume that that is around about the swap, the spread. But in reality, if you ask for an order to be executed there and there's a void and the next order level that they can execute for you is down at that level, that is where you will get executed. So it's just you sign a contract to say, execute me at the price I request or the closest price you can physically achieve for me. They can physically achieve any price they like, because if a load of people queue up with orders at those levels and they decide they don't want to execute those ones, they want to execute those ones, they'll execute those ones. It's whether it's in their favor or not to execute down here or execute here. They get the choice. They're a broker. Like, think of it like an insurance broker, right? So if you come to me and say, I want to insure my car, I can look down this list and go, I've got prices from 500 down to 200. Okay. So what sort of price are you looking to achieve, sir? Well, I've got a quote of 350. Okay, that's great. I can get you 200, but I'll take the extra 150. I'll give you 325. Oh yeah, that's great. Thanks very much. Yeah, brokers do the same thing. They can execute your price at any level they like. There's probably liquidity all the way up those candlesticks, but they make more money executing there, or there, based on the direction of your order. That is what they will do, because their job is not to give you the most favorable trading conditions. Their job is to make money. And every time you press the button long or short, they make a swap commission and spread out of you. And if they can make more, they will on every transaction. You've signed a contract to allow them to do that. Nothing you can do about it. It's part of the job. And you just learn to ignore it. Sometimes it's in your favor, sometimes it's not. Ryan, purchased your EA last night. What's your opinion on settings for different pairs? Don't know which EA it is, and everything's on the website. Ryan, just go. I don't know. Depends which EA you're using, and there are set files for all of them. Apart from the stock index hedge EA, which is just kind of standard out the box. Test and change it to your needs, really. But I'm just using out the box, basically. Ken is the owner of Best Hedge Fund. Oh, Jerry, you're in here promoting someone, are you? Okay. Bye. Okay, on that note, as the spammers have come in, I shall leave. Anybody else need anything? I'll be in Telegram. Otherwise, back this afternoon. And we'll see if we can milk the US indices and update on what's going on with the FX. All right, so have a good morning. Anything you need, let me know. Otherwise, I will see you guys later. Have a good day.